So Broadcom reported their earnings last night, and I got two big takeaways, including the second one that comes from the CEO of Palo Alto Networks that was at an ALL-IN podcast event out here in the Bay Area. And what he said during the conference was very revealing. So we'll talk about that second. But the first thing that I want to talk about with Broadcom is they really revealed that the back half of this year is going to be explosive from a capital expenditure or a data center build out perspective. So I would encourage investors to continue to be patient with this build out, because there are lead times on these semiconductors, and also there's lead times on the fundraising. They talked about on the conference call that you have Anthropic, that you have OpenAI, and now just more recently, we did a video on it yesterday, Google is raising tens of billions, if not hundreds of billions of dollars. These companies are going to go IPO and generate even more cash to buy more of these GPUs, or in the case of Broadcom, more of these XPU, TPU units that they're going to be using to train and run their large language models. Broadcom perfectly illustrating that the back half of this year is going to generate large amounts of growth for the company. I'm sure this is going to flow through into the AMD and certainly the NVIDIA ecosystems as well, and really across the board. So there might be a little bit of a breather here for semiconductors, maybe for the next quarter or so, where investors, figure out how they're going to price in the back half of the year. But the revenue is going to come pouring in, and it's really lining up for 2027. And maybe even the second most surprising thing that they said on the conference call is now Broadcom has visibility into 2028. They said they didn't have that 3 months ago. Now they are seeing that they have order visibility, meaning they have customers committing all the way out to 2028. I'm sure if you talk to NVIDIA, they're seeing the same thing, maybe even stretching out into 2030. Now, the second very interesting thing, and people aren't really talking about this except at the highest level. This little nugget of information comes from, there was an ALL-IN, which is like a podcast here on YouTube. They had a liquidity event out here in Yountville, which is just north of San Francisco. It's like in the Napa Valley region. And one of the presenters was the CEO of Palo Alto Networks. And during the talk, you had like an app where you could rate kind of what the speaker was saying and how you reacted to it. And the highest rating reaction that he got was when he revealed something actually about Google and Google's strategy going forward when it comes to token pricing. Now, what we're seeing in the large language model era right now is token pricing, or the price to use these large language models, is actually trending higher, because these companies are preparing to go for an IPO. They're trying to pad their stats, if you will, for investors, and trying to paint as rosy a picture as possible for the private and eventually the public markets. And it's completely understandable. So we're seeing, particularly at the frontier level, an increase in pricing from a large language model perspective. But the CEO of Palo Alto Networks revealed something very interesting, and it talks about Google. And Google's strategy over the past 20 years is to actually reduce the cost of things to zero. Think about their product where they offered a suite of Microsoft Excel-like capabilities, Microsoft Word capabilities, among other things. At the time when Google released their documents and their Sheets product, it was revolutionary to just give this away for completely free. Think about their Maps product as well. In the past, you thought you might have to pay for it. You had to buy a map. Google just gives GPS data away for more or less free to the end user. That, at least according to the CEO of Palo Alto Networks, that's going to be the strategy for Google when it comes to token pricing. Right now, Google is playing the game along with the frontier models and continuing to keep prices relatively high, except maybe on the really quick and slightly low-powered flash models. But the CEO of Palo Alto Networks believes there's going to be a moment of reckoning where Google slams the price of tokens down to zero, or pretty close to zero, a number very close to free. I believe the price of tokens is going to be just a small increment over the energy price that it costs to deliver those tokens. Now, what does this mean What does this mean for Broadcom? This video is about Broadcom. Well, Broadcom offers one of the most cost-efficient ways to deliver tokens. They already do that. So this is a big deal for Broadcom. As the industry is raising prices, it certainly is great for the entire industry, including Broadcom, but as token prices get slammed to the floor, and as you have frontier models like Google put downward pressure on prices, and after Anthropic and OpenAI go public, there'll probably be a reversal in price to grab market share. Well, that will play right into the hands of Broadcom, as they already offer the low cost leader when it comes to delivering tokens. Folks, that were my takeaways from Broadcom's I'm buying the dip. Let me know down in the comments if you are. See you soon.